The first Fed meeting under Janet Yellen starts today. She is scheduled to speak around this exact time tomorrow. We're going to be all over it. Here's what Wall Street is wondering. Will this spur market chaos, or can Yellen calm the waters? Stepping up for today's throwdown, Fox Business's very own Charlie Gasparino and CME trader Larry Shover. Let's get started. Larry, you think that Janet Yellen could be calming to the markets?
I absolutely do, and that's what we're having a rally today for, above and beyond everything else. Right now, she understands. She's very disciplined in approach. She cares about price stability. With that in mind, she knows she has to shift from quantitative to qualitative. It's not going to be easy, but the market expects her to come up big tomorrow.
What do you think, Charlie?
Well, I think Janet Yellen is like, the heroin dealer who gives extra heroin to the junkie, which is the market right now. So if you're saying whether the market's going to be calm with this, but I grew up with people that partook in heroin,
really?
And when they did a shot of that stuff, they felt a lot better. But here's the problem. I don't know, quantitative easing. What we have right now is a taper on the quantitative easing that really doesn't amount to much.
Right.
And the problem is that we need some strong medicine. The people like my guest on the other end need to take some massive losses. The market needs to go down. We need to sort of establish a sort of framework where we are not devaluing our currency, which is what we're doing right now.
Larry, do you agree with that?
Right. Not totally. I mean, a lot of that is due to the emerging markets. The dollar.
Because you're not supposed
to. Although over the next 6 to 9 months, I am hoping that we see a retracement in the dollar, but right now we're not, and it's indicative in the yields that we're seeing. We've seen a reversal in real yields from 3% to 2.69. That's where we are now. However, to Charlie's point about being a heroin dealer, keep in mind, I mean, Janet Yellen is between a rock and a very hard place right now. She is trying to create price stability, and she can't do it when she's got the White House and everybody else that's in Congress and Senate working against her.
Well, with all due respect to Janet Yellen, she's supposed to be independent. The fact that she's not,
right.
I don't blame the White House. I will say this: we're venturing into very dangerous territory. We have a Fed chairwoman who is essentially Ben Bernanke on steroids. She is the king of all heroin dealers. And if you're worried about the country going forward, you're worrying about the economy, you're worrying about people's savings, this is somebody that is very disastrous. We should point out that when you enter in a situation where the Fed isn't really cutting back on long-term rates, they're tapering but mildly. When they're telling you they're not going to raise short-term rates, well, guess what happens? People go out and buy the Puerto Rican bond deal. Okay, buy something based on yield.
They reach for yields in dangerous ways.
They reach for yields in dangerous ways. That's what happened back in 2006.
Right.
And I'm telling you,
we're setting up a disaster. Larry, Charlie's killing you here. Are we setting up for disaster? You're getting killed.
We're seeing something different right here. We're seeing the tapering actually having a great effect right now on banks. We're seeing the velocity of money move up, move higher. We haven't seen it in a very long time.
They're not even lending it out.
We're also seeing
they're not
yes,
lending
they are.
it out.
It's becoming.
Oh, really?
Yes, they used to go after conservative long-term loans.
Let me
now
tell you
we're seeing a lot more short-term loans
lending
over.
This stuff.
I don't know.
Right.
I don't know. Charlie won. I feel like my money's about to get hammered.
Talk to small business owners. They'll tell you how much they're getting lent to.
Charlie, we're going to see you back here in a moment. Larry, best of luck to you.